I'm joined with Erik Triggs today. He just finished presenting at our Market Outlook meeting. Erik, your presentation on call it the refined fuels and crude oil. Can you kind of give me the factors that going on in the world in the U.S. kind of driving prices and supply and demand?
Yeah, absolutely. I touched base a bunch on kind of two opposing pictures that we got going on right now. From a worldwide picture, things are actually pretty good. We've got an oversupplied market that we've been in for a while, hence why prices have, in general, worked their way ever since the election. Crude's gone down about $10 or whatnot, and a lot of that is fed by lackluster Chinese demand growth and OPEC bringing back gallons to the marketplace has been the biggest factors there. And that's going to continue to be looking good into the future with projections by the Department of Energy and even getting more of a oversupplied picture that kind of tops out early next year. So from a crude oil perspective, it looks really good for oil to continue its trend even further lower than it is right now, especially once we get into the winter, which is a seasonal time we tend to pull back. The hard part is locally in the U.S., it's not as good a demand picture. As OPEC brings these supply back online, they keep getting their market share back. They're commanding it back from the U.S., which has stolen it from them for the past 5 to really 10 years, for that matter. And they're going to be successful due to our high break-even cost points here, due to 80% of our oil coming from shale oil anymore. They're going to get that. They've been getting that market share back lately, which has resulted in lower crude oil inventories in the U.S., which has resulted in low diesel inventories and low gasoline inventories, which are going to be kind of a new normal moving forward. That's going to keep a buoyancy to our more U.S. market, but ultimately we are in a worldwide market that the trend is lower, but with those shortages and stuff on everything, that's going to create an interesting scenario where the Department of Energy, especially for diesel fuel, which we're really short on U.S. and even more so in the Midwest, they're projecting things to climb into the fall, which I expect to, followed by a lot of shortages too.
Erik, you just kind of went over some of the supply demand factors, and I know a big one, call it on prices in the U.S., has been all the tariffs and tariffs coming out basically since February. More crude coming from OPEC is a good thing, but with tariffs and now being an importer, that's raising prices. If it's 10% in Saudis, that's call it $6 a barrel on $60 crude. If we're 30 with our friends in Canada, that's closer to $20 a barrel. Who knows what we do with Russia and some of these others? What do you kind of see is that going to give any insulation to more U.S. production, or it just is still kind of more trending lower?
It's a complicated question. Great question. Actually, like more directly related to us, not as much, believe it or not. The biggest thing is we don't import in that much crude oil anymore, and what we do is import it in from Canada for the most part. And luckily, this was a scare for a while. Canada is exempt on the energy front from those imports being tariff type thing, which could have, in fact, I would argue a lot of our refined fuels in the Midwest is actually from Canadian crude oil. So that could have affected us drastically, but that exemption was super big. Now, what can affect what people are focused on tariffs right now is Trump's threat on tariffs on any country that is buying oil from Russia right now is the biggest threat that could really spike prices on the tariff front that he's kind of negotiating, namely India and China are the big ones he's negotiating with there. And he's throwing deadlines out there. Now he's meeting with President Putin this Friday, which could be a big indicator on where the war works with there. But that would be the biggest thing, is if he slaps some big tariffs on them, how that affects things is that could potentially limit Russian crude getting out, which would affect the supply demand picture. And that oversupply I was talking about isn't going to be so oversupplied if that's the case.
Erik, on diesel, thank you again. Like you normally do, you put out a recommendation for our members and our customers. Can you tell me about the recommendation on diesel heading into the fall, and then what you also were recommending for spring needs?
Yeah, absolutely. Those are actually two different questions. When we're talking fall or spring, I got two different answers. For this fall, I created a picture of a very undersupplied market due to this OPEC stealing back market share. And actually, our shale boom is projected to top out. Our production in the U.S. is projected to top out this year and fall into 2026, consequently, marking kind of the end of the shale boom. And that's resulted in the short inventories. Like I said, we're really short on diesel in the U.S. and even more short in the Midwest. And then I'm also staring at a monstrous corn crop that it looks like is coming here, which could increase the demand for diesel. And what that it's twofold. One, supply outages are probably going to be a major concern this fall. So, and the best way to protect from that is to fill up your inventories. So if there's one recommendation I have, it's fill your diesel inventories to protect from those supply shortages. And what do supply shortages do? They spike prices, particularly like basis spikes and stuff like that. So that can raise prices, which that inventory protects you from. I also recommended considering contracting above and beyond that, just because with this shortage and stuff, that the Department of Energy is projecting, even though they project crude to trend lower moving forward, they project diesel to spike this fall due to these shortages. So you may want to consider contracting. We've seen prices come back the last few weeks, so that creates a buying opportunity too. Seasonally, basis and futures rise into the fall. All of these point to a good buying opportunity now to protect yourself price-wise and supply-wise in the fall. Now, spring is a different scenario. Department of Energy has prices trending down this winter then after our spike this fall, which I totally agree with. Seasonally, our best prices tend to come in the winter. I'm guessing that's going to be the case this year. That world oversupply will start to hang in balance and drag diesel prices down this winter. So that, as for the spring, I would not buy any 2026 at this point in time. I would wait till I think we're going to have an even better opportunity come this winter to consider doing some contracting for the seasonally higher timeframes, which is spring or next fall.
Erik, propane. So talk to us about what's going on in the markets in the U.S. and globally with propane, as there's been a lot of different demand pulls the last few years with the Russian war and more exports to Europe and building, call it, more pipelines and stuff to export natural gas and LP. What's going on in the propane world?
So the good news is we are well supplied in propane right now this summer. We've had a really great summer building season, which is the time we kind of build up to get us ready for fall and for winter. The reason for that great building season is propane inventories always depend on two things. You've got production, which keeps increasing year after year. With the shale boom, we'll see how much it continues on pace, past this year. But we're sitting well supplied on production right now. And being as how we export 80% of our propane anymore, it's kind of how much is going out the door, which is always increasing along the lines with that production. And we've had kind of a lag in that export over the last few months, which has allowed us to get a great building season and allowed prices to subside down some here to about as low as they've been over the last few years, which largely speaking, the last few years, the market's been fairly flat for propane. The price you're seeing this year is similar to the previous few years, but we're about as low as we are right now, which creates a buying opportunity. And with that, projections for the future is it's notable 5 of the last 5 years prices have spiked during the winter. And I'm talking about that late December to late February timeframe. So while I'm not expecting a ton of grain dryer this year due to early planting, a pretty decently along corn crop, projected hot, dry August. Namely, I'm noticing there is going to be a big corn crop, which could bring back some of that demand. But still, I'm not expecting it to be crazy, which I don't know that we'll consequently see prices spike this fall. But I do expect them to spike just like they have all the previous years during the winter timeframe.
Eric, you just got done talking about, seasonally we're low, inventories are good. What's your recommendation? Is now a time to book my, call it fall, winter needs and maybe get some contracts on for what I'll use above what I can hold?
Absolutely. Yeah, there's really two recommendations. The first one, which you can't put a ton in, but with the good buying opportunity I was talking about, prices subsided during the summer when they're seasonally on the lower end. That's the best time to fill your inventories if you haven't done them yet. But above and beyond that, the biggest thing is contracting to lock in your prices above what you can hold. And absolutely, I recommend you consider contracting. Like I talked about, prices have spiked 5 of the last 5 years. Now it's varying levels. It kind of depends on how cold the winter is. The more cold it is, the more it spikes. But even we've had warm winters here, some of the winters in the last 5 years, and we saw prices spike nonetheless. There's a lot of factors there on supply wise that are affecting that, and I think will continue to affect that. But with that said, it's a no brainer for me every year. Pretty much your best bet is to protect yourself by contracting, because when that's the scenario, your upside risk is way more than any chance that prices are going to come down much during the winter.
Well, thanks again, Eric, for your time and your recommendation. And once again, members, if you have any questions or want to book some propane, please reach out to anybody at Pro Co-op on the energy team, and they'll be happy to answer your questions and help you. Thank you.